Well, good evening, everyone. My name is Alvin Newell. Thank you all for joining us this evening for this special training. Um, Thank you all for taking time out of your busy evening to be with us. Um, Guys, I have a trio of awesome individuals here online, right? Three individuals who have taken this opportunity and has run with it. Three individuals who have taken their training and their learning to another level. And as such, they're going to be sharing with us this evening a strategy that they've been using and has been very successful with it. So to start off, I have Mr. Cornelius Walker with us. He's a young man. He's an entrepreneur. He's a father. He's a trader. He's but what, 28 years old, Sian, 27, 28?
Well, I'll take all modesty. I'm actually 35 this year, but I'll take all modesty.
Oh, you're getting up there, young man.
Yes, I'll take all modesty.
Right, you're getting up there. So,
Yes, sir.
so yes, been trading for what, about 4, 5, 6 months,
That's correct.
right? So, they have really taken to this like fish to water. So, they have agreed to share with us this evening a strategy that they've been using and very successful with it. It's called the Ichimoku Kinko Hyo Cloud. So, without any further ado, Sian, take it away.
All right. Good night, guys. I want to make sure that everybody can see my screen, just to make sure.
Yes.
I'm seeing
Okay. All right. Thank you. Good night, guys. As again, thank you very much to Mr. Alvin Newell, who with that wonderful introduction. Along with I want to talk with my staff, along with Alvin Joseph Newell III and Sam Bernard. You know, we've been working on the strategy for the last couple of months, trying our best to fine tune it to the best that we can. We think that we have some success based on how we've been trading it. And we'd like to go ahead and share that knowledge with you guys as well. Now, I'm just going to go ahead and start and go through a couple components before we continue, just so we have an idea of what we'll be learning and what we will be dealing with tonight. Now, the strategy that we're going to be using is called the Ichimoku Kinko Hyo. Now, what the Ichimoku Kinko Hyo stands for, as you can see here on my screen, Ichimoku is for one glance, Kinko is for balance and equilibrium, and Hyo is for chart. Now, the Ichimoku Kinko strategy was created in the 18th century and was fully completed in the 1930s by Gochichi Osada, who wanted to create a system to analyze the chart with actually less time, something very more simple that you can go ahead and take one glance to look at, just so you can get a firm understanding of if it's something you would like to trade or not. Now, with the Ichimoku Kinko strategy, it's very useful in many ways. You can use to track momentum of pairs. It actually shows support and resistance. It actually helps to give you entry and exit signals. It shows you like stop loss trends, market bias, and from some of our more experienced traders, you can go ahead and use your fib retracement levels as well with the system. It's actually very, very amazing when you get to learn and understand how the Ichimoku Kinko strategy works. Now, it does have 5 major components to it, but before I continue with the 5 major components, I want to go through one small indication, and that's going to be called what is periods. Now, on just like the chart, you know what the candles are, but just so you know, candles are also referred to as period. In the Ichimoku Kinko strategy, a candle or period is on the open chart is an indicator of what it's attached to. And I'm going to have a small indication just so you can look at those as well. As you can see here, you can see that there's each candle. And at the moment, the chart that I did take a screenshot of is going to be in the 15-minute. Now, what each candle would represent is one period, and that will represent for each 15 minutes, just in case anyone have any question in that one. So as you can see, the green candle, the first one or the last one, that will be 15 minutes. The one before that will indicate 15 minutes. And that's how we can track periods and on the Ichimoku Kinko strategy. Now, as we go ahead and continue, we're going to go to the 5 major components. And the first one is going to be the Tenkan-sen. Now, when the Ichimoku strategy was set up, it has these major components. And the Tenkan-sen is technically the signal line. It helps to measure the highs and the lowest lows divided by 2 for the last 9 period. Now, by applying price to the highs and the low range for the past 9 periods, it gives you a market measurement for the equilibrium. Now, this is a short-term price momentum. Now, just so you can see here, the red line and this is on the 4-hour chart, will actually identify what a Tenkan-sen is. And I have a couple market structures as well. This is the application I'm using is MetaTrader 4. Now we're going to go show the Kaijin. And that's the Kaijin Sen. You know, I'm Jamaican. Now the Kaijin Sen is for measurement, and it's for the highest high and the lowest low divided by 2 for the last 26 periods. Now this line indicates the slower range in the market. This is the medium price momentum. This is also good for stop or support levels or change of trend. Actually, when we get down to the TK cross, that's going to be very fundamental as well as we go further on in the training. And as you can see here, the blue line does go ahead and it identifies the Kaijin Sen, as you can see here. Awesome. Now we're going to also go over something called the Chico span. And one of the reasons why the name sounds so Latin in different ways is because the Ichimoku Kinko strategy is actually, I would say, Japanese. So a lot of names are Japanese. And the Chico span, it actually measures the momentum of the market. It is a price right now shifted. So wherever price was at this right moment, it will be shifted back 26 period. So you can go again and take a look at it. So it shows you where the market is going to be right now and where it's coming from. And as you can see here, and I will have some footage zoomed in a little bit more for you guys so you can take a look. I'm moving the mouse right over it. And that will be that green line right there. All right. Now we're going to get to the 2 last components of the Ichimoku strategy, which is we call the Kumo cloud, which is going to be the Senku A and Senku B put together, and they actually form the Kumo cloud. And this is so you can see them right here. Now what Senku A is the highest high and the lowest low, and that is divided by the last 52 periods. And as you can see, Senku A right there, I actually have it highlighted in blue just so you can go ahead and see it stand out. And I have it set like that for a specific way, but we'll go over that shortly. And now we're going to go over to Senku B. Now, Senku B is the Tenkan-sen and the Kaijin divided by 2, and it's actually shifted 26 periods ahead in the future. And I will have that highlighted in red at this moment, as you can see here. Now together, guys, all those components to one forms a full Ichimoku Kinko strategy, as you can see here. And now it does look like a lot at this current moment while we do look at the charts. That's one of the reasons why I want to make sure I go over it individually, just so when you can take a look at it and we go through some of the components, we can understand how it works and why the Ichimoku Kinko strategy is used the way it does. All right, so we're going to go over the most important thing of the Ichimoku Kinko strategy. And I want to go back one just so we can take a look here. Now, we're actually looking at the full strategy, and I want you to look at the Kumo cloud, which is the shaded area that you can see right here, if you can see my mouse shading, right? Now, what that is actually used for in the Ichimoku strategy is for support and resistance. It's like a floating resistance band. So what we normally look at that chart and says, if price is above the cloud, it signifies that it's going through an uptrend, which the market will naturally shows up. Now, if price technically goes below the cloud, right, it signals a downtrend. So that's when you would say price broke complete support and resistance. Because when we look at the Ichimoku Kinko strategy, anytime you see price or you see these candles right here inside of the cloud, mean that you're going through some form of support and resistance. Now I want to go ahead and get to the TK crossing, which is very important right here. And what the TK crossing is a point when the Tenkan-sen crosses the Kaijin. Now, this is very important, and this is very good for trend as well, because what this normally shows is a change of trend at the current market as it stands. So as you can see here, every time you see that red and that blue line crosses each other, that will be consist of a TK crossing. Now I'm gonna go ahead and point just about two, just so you can see what change the direction of market is. And I will start right here. As you can see right here, market had a change. Market was going up, and as a TK cross, it shows that market went on a downtrend. And as you can see, and then you can get a wonderful entry point there to get in. And then what we could say, normally when you try to trade with what I would say the Ichimoku strategy on a 4-hour chart, I normally go for a 30 or 40 take profit. I normally set my first take profit actually at 25 just to be safe. And then I'll say I'll take profit two of 30 or 40 pips just so I can grab anything extra. But I'll make sure I move into profit after 25 pips there. And what you can see, when the TK would have crossed again, if I would have gotten for a seller right here and went up, that would have been an exit point. But hopefully I would have took care of profit before market went that way. And then you would have got out right here, as you can see here. And as you can see by my movement of my mouse, the TK did go ahead and cross right here again and show that beautiful downtrend. So if you'd have gotten exactly right here, and I want to make sure you understand, whenever the TK cross, you would like to get in right after when it crossed, the initial candle right after. And one of the reasons why we like to emphasize you like to wait, because sometimes the TK may cross, and I want to show in this area right here, consolidation, it did go ahead and cross up, right? But the candle that followed it was red. That showed that it went back for a downtrend, even though it did go back up. But based on that movement, you can tell that the market was still consolidating. So you want to see direct movement. And as you can see, the market continually went down. Now, that was what, and that's what I would say for my emphasis, the most important part of the Ichimoku strategy. Now I want to go over another component as well. And we're going to call, and this is called the Kumo cloud breakout. And the Kumo cloud breakout is when price breaks support and resistance and moves into an up or down trend. As you remember, I said earlier, the Kumo cloud is used for support and resistance. And we're going to look at that right here. So as you can see, the market was going up in an uptrend. And as it hit right here, as you can see, my mouse indicated, it hit support and resistance. But as soon as it broke up, price went down. So a lot of people like to trade the Kumo breakout. Now, I would not say it's not accurate. It's about 75% accurate, so you can go ahead and trade it. And sometimes whenever the market goes back into the cloud or comes back, you got to look for the second candle as well. I want to make sure you see that to see if price continues. As you can see right here, it didn't. It went up for the buy. It signaled for a red right here, which moved down to a sell. So you would never have got in on that initial sell. You'd wait for the price to completely go down for that candle to form. When it formed the second candle, then you can go ahead and go back and enter in. And as you can see, the market moved down here in a 4-hour chart. If I would have drawn a line from right there, get out about, let me see, I normally said 25 pips, about right here. That would have been a very nice indication before price went up. But as you can see, it continued underneath the cloud, so price kept on going down. And that was technically a Kumo breakout. Now, I want to make sure altogether that was concluded the full Ichimoku strategy and how the Ichimoku would work. Now, I want to go over some other components as well. And I want to go ahead and pull up my MetaTrader 4. So if you can see my screen here, this is what the full Ichimoku strategy would look like. And I like to use live market. Now, I want to go over one very important thing, and this is right here. If you can see, is the Chiku span, right? Because it's showing that price has shifted back. Now, one of the indication, and I want to show this live, is how the Chiku span actually will work. Because how you will trade the Chiku span along with the market is that as long as the Chiku span has open area to travel, or open market, as you can see here, there's nothing, there's no candles that it will be touching. It goes down. That down direction right here that shows that as long as the Chiku span has open market along with the current market, right, price will always go for a breakout. As you can see, it went down from here. And if you look back what market looked like before it went down here, which should have been over here, this is where it wasn't for support and resistance. That's why, as you can see, the market went back up. But as long as there's open spot, the Chiku span will always move identically to where market is. As you can see here, it went up over here, and you can see market over here as well. And so, guys, now that is I would say the first component of how the Ichimoku Kinko strategies work. Now, I want to go ahead and turn you guys over to my brother-in-law, Alvin Joseph Newell. He's going to go ahead and take the second half of this training. So, AJ, if you would like to go ahead and continue, I'm going to stop my share so you can go ahead and share yours.
Sure, without a problem. So amazing. Thank you, CN, for that. That was incredible. Very informational. Appreciate it. I'll go ahead and share my screen. This is my awesome background. But CN likes to trade. CN is his nickname. Cornelius is his surname. He likes to trade on the MetaTrader, well, as I like to trade on TradingView. But as you can see, I had the same Ichimoku strategy and indicator as well on my platform. But I like to trade with confirmations, right? Confirmations for me are key. So I just took away the Ichimoku just so you can get a more visual understanding as to what the market looks like, you know, regularly with just regular, you know, indicators with your trend lines. So looking at this, I like to trade again with confirmation. So this is the daily. I'm trading on the daily here. Daily, I like to chart up on the daily because the daily is a very strong indicator to tell you how price is moving on the daily, so you can understand better when to get in and when to get out and how to trade on the daily. So this is the same pair that Cornelius was just on Euro NZD. And on the daily, you can see price came down all the way here and then started to shoot back up, right? So at this point, I like to make some horizontal lines that indicate where price had come before. And you can see, right, price in and around this area respected that trend line, in and around this area respected the trend line. But I want to focus more on this area because this is current. This is what I would consider the current now, right? This is what price is doing right now, where the market is moving at this point in time. So if you could see price back here on December, just before the New Year's of this year, 2019, price had came down and then started to come back up. So I decided that this was a good spot to, you know, draw a line of respect or support, I would say, coming down here. And it went back all the way up and it shot up all the way on a daily to this very line. And wicks, in my opinion, are still considered price for me, right? I like to see where the wick is. That's still where price had gone before, you know. And looking at this, I decided to draw another horizontal line here. And of course, as the days had gone on, months and weeks had gone on, price had gone up and down, and it started to come down right around this same area previously to where it had been before, and then it respected it and started to shoot back up again. And right at that same line that I had where price had been before, where it had previously went up to, it has now started to turn back around. So for me, I'm a very visual person. I like to see how price is moving visually. So understanding that, I could probably moved it down a little bit more, but you can understand that this right here is still, you know, on the daily, giving you a stronger confirmation that price that came down here, and then look what happened. It shot back up, way up. And this is a bullish engulfing candle right here, right? This is and another thing I like to use is confirmation of indicators such as bullish engulfing, bearish engulfing, harami, shooting star. I hope there's people here who are familiar with those words and can understand that and seeing how price had respected it from before and where it is going currently. So going away from the daily and trading actually on the 4 hour or the 1 hour is another way that I like to trade, because that's where I can get in on my entries. And seeing how price moved, I then start to draw trend lines. And looking at this trend line here, right, how when it went up and then started to come back down, I decided, okay, let me just draw a trend line and just see how price will move to that, how it will respect to that. And then same thing as to where price had gone down, whether it was here, but you can see here, it has a much more higher respect, not only because price had come down here before, but also seeing where even after it had broke that structure, it came back and respected it still as a now resistance level, from support to now resistance, where price is going to but retreating from. And looking at that, I use these trend lines as well as the Ichimoku, right, in understanding a way to get in. And this indicator that I'm using for the Ichimoku is unique as far as I'm concerned, only to TradingView, right? Only to TradingView as far as I'm concerned. This indicator right here called the Ultimate Ichimoku. It's a public indicator. You can actually use TradingView for free. You don't have to subscribe to it. I do. You don't have to. But using TradingView, you can use up to 3, I believe, free indicators. And this one, this ultimate Ichimoku indicator is just one indicator all by itself, right? So you could just use this one for free, and you can use this on your desktop, on your cell phone, tablet, whichever, on the go. That's how I like to trade, on the go. So understanding with the Ichimoku, you can get an understanding of how the market is moving and how price can give you entries. With the ultimate with the ultimate, where did it go? With the ultimate, you can see that there's these lines that are protruding from these candles, and these lines are actually arrows if you zoom in. And what these arrows are indicating is a strong confirmation as to how price is moving, right? So up here, if you would have seen when I drew that trend line from before, price came up to here, respected that line of resistance, and has now started to possibly come back down. And I say that because, of course, we don't know and can't predict the market to an extent, because it could go back up and respect it and then come back down, but that would be even better because that would be a double top. And another lingo for the experienced traders, a double top is a strong confirmation for a more possible downward like movement. But as of right now, the market is moving on a downward trend. It has broken our upward trend movement with these previous trend lines I have charted. And I would say I am rusty or very forgiving with my trend lines. I just like to plot up and just see where price is going and how it's respecting my trend lines. And I draw the trend lines just to draw them, and it respects them. It came here, respected it, and it also broke the trend line, but it came back and closed underneath and had continued to respect the trend equally. And this is the same trend line from before. But with the ultimate Ichimoku, I'm able to see these arrows, and I use these arrows as entries, as well as the Tenken with the TK crossing, and understanding how that works and getting entries there, even more confirmations to understand that the trade I'm taking is more profitable. And that's what we're here for, is the profit, to make sure that we are making liable, eligible trades and entries. So again, I like to trade on the 4-hour, but this is where it likes to get interesting with the ultimate Ichimoku. If you go over to the settings of the indicator, you can chart up the settings of what the indicator will give you. So this is by default, as Cornelius was stating, 9 periods for the Tenken, 26 periods for the Kaijin, and 52 periods for both the Senku B and the Senku A. But this one right underneath here is something that we never got a chance to talk to you about, and that is the span offset. With the span offset, if I start ticking it, just pay attention to the arrows, folks. Did you see that movement? You saw that movement right there? The ultimate I keep saying Indimoku. The ultimate Ichimoku with the span offset, when you increase it, it will give you indicators and entries related to those arrows, and they move. For me, I like to use the span offset between 52 to about 150. And I say that because it varies between the time frame that you're on. But for me, I realized if I go on the 1 hour, it gives me, with more candles, it gives me more arrows, more confirmations, more entries as to how the chart is moving. So with the 1 hour, again, if I go to the span offset, I don't want to cover the chart too much. With the span offset, and I increase it, like I said, from about 52 to about 150. I went and I did this earlier today, increasing it to 120. You can see that you're getting more confirmations. This is telling you all these arrows here are all pointing down. This is telling you, if you were looking at the chart on that time frame with that setting of 120, when prices in and around here with these strong confirmations, especially with the the TK cross above the cloud. And I like to look at the 4 hour just to see where cloud and price is as it's crossing through the cloud, right? I can get a more easier of a confirmation for an entry to know that these trades that I'm in are going to be profitable. And as you can see with these arrows pointing down and getting in at those points, you're making a lot of pips, right? And especially with the whole, again, TK cross, looking at the money line and how it respects, going through the cloud breakout. I know this can all seem kind of overwhelming at first, but if you just mess around with it, looking at it, demoing it, messing around with the span offset, finding what's comfortable for you, you can find yourself to be very profitable and very knowledgeable about different ways of looking at the market and being able to analyze it your way to be profitable, right? And again, looking at that confirmation from way up here, from when price had respected the resistance line, look at this nice arrow telling you that price is still going down. And even if you got in here and got the pullback, look at all the rest of the pips that you're getting. Look at all the rest of the pips. And even then, you still have more confirmations with the arrows to continue to tell you that you're in a more profitable trade that way. Now, this is just still, in my opinion, a work in progress. I use this just as a way of understanding how I could, look at the market with the indicators, but I do have my real Ichi with the real settings here. It does look different because it's a different indicator, but it's the same Ichi, and I use this just to see exactly how price is moving with the indicator without the need of the ultimate with the arrows and such. Now, this is something I just found out recently. I'm still testing it out, and I would love for you guys to do the same just to see if you're profitable with these strategies, to confirm that what you're doing will help you in the long run. Just as another way, as a confirmation to analyze the market so that you're profitable as well as understanding, as I said, the lingo of things with engulfing candles and plotting up charts and lines. The more confirmations, the more profitable you are going to become in entering and exiting your trades and analyzing the market that way, and this again is just a work in progress. It's nothing that's going to give you 100% confirmations. We don't want to say that this is 100% successful because we're not psychics. We don't predict the market in that way. If I did, I would be a millionaire. But of course, this is all a work in progress, a way of analyzing the market your way and becoming profitable your way. So do it as you best see fit. I like to be visual. So with the Ichimoku giving me at a glance a glimpse as to how the market is actually moving right now, is, in my opinion, a very useful tool, because I like to see and analyze and be able to judge the market that way. So with that, I like to use the Ichimoku very heavily when I'm taking my trades. And again, with the lingo that Cornelius was stating before, with the whole TK crossing, breaking through the cloud, under the cloud, above the cloud, for me is a way of saying, should I enter this trade or should I not? Is this going to be a trade that's going to be profitable or will it not be? But one of the things that Cornelius did not mention with the money line that I found to be very useful is, again, when the money line is in and around price, right? So in and around price over here is just about where it was over here. And as you can see, it was kind of ranging, right? It kind of got up to here, came back down here, but it never really moved anywhere. But as price went down, as the market moved, then the candle of the money line, the Chiku, oh man, the Chiku, that's not the name, Chico, the Chiku, yes. I like to refer to it as the money line. This guy right here is now in open space. Look at all the open space that you can be. This can go down, it can go up again, but with all this open space that you have, I like to draw a visual box, just like an imaginary box around. So for me, this, if it could pull back, for me, I would accept a pullback only up to here from where price is at right now. But if that's only where my stop loss would be, look at all the possible take profits I could have. When money line is in open space, it is free to move going down, 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 especially with the TK cross, especially going underneath the cloud and breaking through it. You have a much higher confirmation that this trade that you could be in, especially if you got in and around up here, where you had a higher confirmation of structure with support and resistance, you could be in a position of a great swing trade of getting a lot of pips. Because again, if I go on the daily, just look, if you got in on the daily here and you were staying in this trade, even with the pullbacks, that is a lot of pips that you can be taking advantage of. But again, the market is unpredictable in that sense. And I never want to say that this is 100% and that you can read the market to 100% degree, and understanding that what you're going to be doing is going to make you money 100% of the time, but it will make you money, pips, I should say, more successful amounts of times. And that for me is what I look for. As a batter, it's not about how many home runs you can make, but about how many times you can hit that ball in getting a base. The more bases you get, the more likely you are to get home and making your team win. So that is, in my opinion, my strategy of how I like to trade and how I like to look at this market and understanding. And look, on the daily, we're about to get a TK cross. Look at that. On the daily, we could be getting a possible TK cross from the red to the blue. And if a TK cross and the market continues going down through the cloud, even more confirmation of more possibilities of a downward movement. Because right now it's kind of trading in this channel because it respected it up here and it did it again months later. I'm talking months later. It respected the exact same point it had done previously. So I would like to say this is more of a channel, but because it already hit the top, I have more possibilities of now going down. And if it goes down, hits to here, I can get out. I secured massive profit. But if it breaks this trend and now continues to go down even further, just to get out of that daily, you still have, again, price that came down way down here. So you could get the possibility of getting those pips as well. But again, unpredictable market. Don't want to say that's possible or even doable, but that's just a way of looking at the market to see how you can get in at entries and exits so that you're profitable yourself in this market. But with all that said, if you guys have any questions, if you guys want any more further updates on this, just let us know, and we're more than happy to further explain this in a more personable aspect so that you yourself can understand this and you yourself are profitable. But at the moment, I would say use this strategy, demo it, see if this is something that you are familiar with, that you can get familiar with and becoming profitable yourself, because this is a very, very useful tool for those visual creatures out there like myself. And I like to see how the market is moving with all this different confirmations. And I know it can look confusing or maybe overwhelming at first, especially for those who are used to a market like this, just basic bare candles. But at the same time, you are going to be, in a sense, knowledgeable if you can learn that and master that just by messing around with it and using it that way. But again, I recommend demoing it just to be sure. But other than that, thank you so much, Alvin, my dad, Cornelius, for the introduction.
Yes.
Oh, no. But if you guys have any questions, Samuel, if you have any input on this, let me know. If I missed out anything, let me know. This is, in my opinion, a very useful and a very profitable strategy so that we all can understand how the market moves in a different aspect from your usual naked candles, I would say, and using it this sense.
Thank you, bro. I appreciate that. All right, so good night, everybody. My name is Sam. AJ, if you'll let me, I'll go ahead and share my screen. Okay. Let's go to our desktop. Click share. All right, and we're gonna click this. All right, so with all the information that we got, I'm just gonna reiterate how we go into a trade. So basically, for a buy trade, we're actually looking for when the red and blue, the TK cross, happens above the cloud. And the cloud is right here. And so we're looking for whenever TK, for example, right here, would cross above the cloud, and that would be a good indication of a buy. And then for a sell, we'll look for when the TK crosses underneath the cloud. And once it crosses underneath the cloud, that's a good indication as well as a good sell. And we also want to look at the cloud as like consolidation. So whenever we get a cross that's like in the cloud or close to the cloud, probably like here, I wouldn't really go and take that as a trade. It could turn out the way it did. Like, for example, here, it actually crossed and it continued into a Kumo break and kind of, went into the buy. But this is something I would shy away from. I would more look for when the crosses are for a buy when it's above the cloud going up and for a sell when it's going down. Now, another thing that we've been coupling the Ichimoku strategy with, along with the support and resistance lines, is, one moment, the currency strength meter. Now, how the currency strength meter works is it shows the strength of a specific pair at the exact time live. And what we did, we actually set up the browser so that it repeats and refreshes on its own so that we can always see a live update of how the market is moving as far as strength. And how we use this for our benefit is we actually pair a weaker currency pair with a stronger pair in order to see, okay, which way it will go. Now, let's go back and look at which one we had open. We had Euro NZD open, for example. So what you would actually do, you would pay attention to how where the first pair is, which is Euro, and then you would see how strong it is in relation to the second pair, which would be NZD. So for example, we'll go over back to the currency meter, and Euro right now is at 4 bars. And we'll look at NZD, it is also at 4 bars. So right now, what that means is they're both at the same strength, and that shows like a lot of volatility. It could go either way. What we want to look for is like Euro, for example, against CAD, which would be Euro is stronger, so it should be pushing Euro up into a buy if it was Euro CAD. Versus if we did Euro USD, USD is stronger. So really, we're supposed to be seeing Euro being pushed down by the strength of USD. But that's pretty much it. So we'll do that. I'll look at the market and we'll see which ones are stronger. And then we'll look and we'll just search for TK crossings and find our entries.
Again, as well with the indicators of the support and the resistance and things that make sense for that pair, oh my gosh, along with the strength of those pairs, like Sam said.
And basically, demo is so important. Like, I want to say that we stress demoing because that's such an amazing tool. You could go in a market and actually see how it is, get comfortable with taking trades, and you don't lose any money. Like if you have that, I would always stress using it indefinitely.
And guys, if anyone didn't have a chance to go ahead and set up their Ichimoku strategy, Sam, I know you're on the live chart. Would you mind pull up Euro GBP, please, just so I can point something out on the 4-hour chart?
Yes, sir. Euro GBP, and I'll right click for the template, and I'll add my Ichimoku. Should I go to the 4-hour?
Yeah. That was a beautiful sound, right?
Right.
So,
okay.
And the reason why I kind of have Sam pull that up, guys, just right before we wrap it up, a TK crossing just happened on the Euro GBP. Now, I want to go ahead and point it out while Sam, if you can move it forward to a little bit close in, is that granted it did go ahead and cross, and market is showing that based on the candle that is being formed, that it could be going down. But when we say we're looking for the TK cross, if that TK would have crossed the red, crossing the blue, going up in an upward trend, that would have been a more better confirmation for a buy. Now, it did just cross for a sell, but based on how it just crossed for the sell above the cloud, while we're looking at support and resistance, that would not be a trade that we were looking for. The only way that you would want to continue with a trade is if that trade would have continued with a downtrend, and then it would have a Kumo or cloud breakthrough going through the support and resistance before we enter the trade. But I just want to go ahead and point it out while we had a live TK crossing while we were on the trading session.
Appreciate it, bro. Appreciate it. And really, that's about it. So we appreciate you guys.
And if you guys have any questions, we at the end, feel free to ask. I'm open right here. If anybody, my information is right there. I want to make sure you can look us up on Telegram, Cornelius Walker. So if you feel free to send me a message if you're curious or you have any question about anything that we did go ahead and speak about tonight.
And just so I could just add a little bit of extra on that, what you guys said, again, with the support and resistance lines I made, I don't mind quickly sharing my screen really fast regarding the exact trade you guys are just talking about, Euro GBP. Just taking a quick glance at that on the daily like I did, you can see, again, price came up again to this point before it came down, respected the same exact spot from before coming down, and again, it did it again. So it's a double bottom going up, but again, this is more like a channel that is trading in. And it came up, crossed it a little bit, but it's coming back down now. So it could come back down and respect the chart that it did before and going in a more up and down pattern as it's gonna eventually go back down again. And especially with the confirmation with the Ichi, you can know that this will be a profitable entry at this exact moment that could make you some pips. So I would prefer demoing it and looking at that way, but looking at it on the daily and just seeing confirmations or seeing trends and support and resistance of how it's going about it, you can see that this line of where price has been is respecting that. It did it once, it did it twice, and has done it now 3 times. So the confirmations are very strong, and it has gone up on a very strong buy. And of course, news and what's going on in our lives at this point in time with British or the GBP currency, with the whole exit of Prime Minister May, I have been hearing a lot that price and strength for GBP could be going in that favor, because now that people are aware that she's leaving office, that there may be a more indicator of where price would be needing to go. And look at this, just look how strong the buys have been. And this is on a daily, just straight buys. It's just been going up, up, up. So what goes up must come down. So hopefully with that, it could be very profitable, and you may have some type of charting like this. Of course, price moved almost in a straight line here, but price, of course, if you look at it on the hour and 4 hour, it never moves like that. Of course, it goes up and down. So that's what you should be expecting, an up and down movement, but lower lows and higher highs. So that's what you're supposed to be expecting in this sense, should it be going back down. And that's what I'm hoping for, going back in this direction, respecting this and possibly breaking through and going that way. But with the British pound and understanding how currency in real time is going about it in the news and such, with the exit of Prime Minister May, I've been hearing that price for that currency could be going more in that favor. You think with the exit of your Prime Minister that the pound could be weaker in that sense. I've been hearing that in actuality that they have more of an understanding where price needs to be going, and in that sense it could be going back down now. So that's just a little bit of extra tidbit for you guys. If you guys want to go ahead and maybe demo this here, this would be an excellent example of how this strategy can work in making you some profits, especially with the TK cross on a 4 hour. It could be consolidating a little bit in this range, but it definitely should be breaking through and hopefully going back down, because this has been an incredible buy with hardly any pullback. So what goes up should come back down. And I think that's a great way to exit this session on that note.
Awesome, guys. So I have one simple philosophy, is that when I see greatness, I always step back and stay in the shadow.
Wait, Father, if I may, I could hardly hear you. Could you get closer to your mic or turn up your mic or so?
I'm sorry, I'll walk now.
I hear you loud and clear, Dad. Thank you.
Awesome. I was saying that I have one simple philosophy, and that is when I see greatness, I always stand back in the shadows. You guys have just been awesome, incredible. You three make me very, very proud. Congrats.
Thank you, Dad. I'm happy.
Congrats. Well done. You guys have just been awesome. Cornelius, good job.
Thank you very much, Mr. Newell.
Sam, good job.
Thank you so much.
AJ, good job. Guys, if you have any questions, go ahead and drop it in the chat. We have about 5 minutes before we wrap up here.
Yes, please. I want to make sure we can anything.
If not, if you guys have no questions, I mean, you guys have been so on point. I doubt that there's going to be any question, really. Yeah. Good job, guys. Good job.
You're welcome, guys. As I said, guys, if there's any information that we missed or you guys are seeking, please reach out to Mr. Newell. And he's very good at relaying information, so he'll probably get it back to one of us or find a form or shape that we can go ahead and respond. But I want to say good night, guys. I thank you for your time, your patience, because I know you could have been anywhere else doing something better, but you decided to sit here and listen to us teach. So I want to say have a wonderful night.
Yeah, great. Yeah, there are no questions in the chat. So so guys, thanks again. Thanks for jumping on. Thanks for taking time out of your busy Wednesday evening. Thanks, Sian. Thanks, Sam. Thanks, AJ. You guys have been just awesome.
Thank you, everyone. Thank you, Dad.
Good night, everybody. Take care.
Good night.